First Revenue Committee of the 68th Legislature. It is the 68th, right? Not the 86th, not the 67th. That's an inside joke. Today, we're going to be covering Senate File 67, the long-term homeowner tax, and there's been some revisions to it. And with that, I'm just going to cover the revisions and then open it up. Basically, it doesn't have any backfill to it. The time frame people have to live in their house has gone down from 8 months to 6 months. Yeah, oh, and we took the sunset date out of it. So with that, we'll start out with the Department of Revenue.
Chairman McEwen, would you like me to take roll first?
It is my first time. Roll call.
All right, Senator Case. Present. Senator French.
Here.
Senator Ide.
Excused.
Senator Pappas.
Here.
Chairman McEwen.
Here.
We have 4 present, Mr. Chairman.
So we have a quorum.
Mr. Chairman, Brenda Henson, Director of the Department of Revenue, welcome to Cheyenne. This particular bill, as you stated, was a Revenue Committee sponsored bill. It amends what was Enrolled Act number 44 from the 2024 session. The bill last year implemented a long-term homeowners, and Mr. Chairman, you stated it correctly. They have to be 65 years of age or older. They have to have paid Wyoming property tax on a residential property for at least 25 years. And under current law, they have to occupy that residence 8 months out of the year in order to qualify. We were required by statute to promulgate rules and design the form. Those forms were provided to county assessors in September. I do know that every county treasurer in the state sent with tax bills in September a notice about the long-term homeowners exemption to ensure that property owners were aware of it. And the assessors across the state started taking applications. It's a 2-page application that they complete. They do have to prove, they have to have some proof, documentation of their age. Now, the listing of where they've paid property tax is just a 1-page as well. From this year to this year, I own this house at this residence and I paid taxes on it. And that's all they have to do is tell that. They don't have to provide a copy of those receipts or anything like that. So we implemented that. We put the functionality within the computer-assisted mass appraisal system for all assessors to start tracking the applications that they have received. As of today, we're looking at approximately 18,000 applications statewide. As you know, the deadline for applying for this relief is the 4th Monday in May. And so we anticipate that that number will go up. And so we have before us today an amendment that takes this long-term homeowners and just reduces the number of months to 6 from the 8, and then removes that sunset or that repealer language that was in the original bill last year. Now, one thing I will remind you is this bill has an effective date of January 1 of 2026. Due to the fact we are already taking applications, the rules have been promulgated on the 8-month that was in place from last year's legislation. So this bill will impact next year's applicants if it passes. Now, the one thing that I feel is important to cover, since this bill is a percentage of value that is exempted, in our implementation of multiple property tax relief bills, it came to our attention that this bill requires an exemption of 50% on the fair market value of the residential structure and residential land. In our statute, we've got fair market value, then the level of assessment is assessed value. Assessed value is just that. It's the assessed value after applying the level of assessment. That's where we would end up playing this exemption. The question then was, we've also got on the books a 4% cap on the residential structure in 2025. We implement in 2025 a 4% cap on the associated residential land as well. That's another exemption that we're applying on these residential properties. Now we've got this law that says we put 50% exemption on that fair market value. What the language does not include is a calculation clarification. Our question to this body is it your intent that if they're getting an exemption of the 4% cap, is it appropriate that we apply another exemption, a percentage exemption, to the fair market value, when basically what that does is we're exempting value that we've already exempted by the 4% cap, and it tends to grow. What I've been working with legislators and LSO staff is trying to come up with language that clarifies that if you have percentage exemptions for property taxation that are to be applied to the same property, there needs to be guidance in statute that says what is that method. So for example, LSO staff I know has drafted an amendment that would be appropriate for here if in fact what your intent was, we apply the 4%, we have a remaining assessed value, and it's that remaining assessed value that we're applying a 50% exemption for these properties that have a long-term homeowners. We apply the first exemption, have a net value, and then we apply the next exemption. If that is the will of this committee, I have language that Josh Anderson had provided in our discussions. But it is something that I just wanted this committee to be aware of, since you have the long-term homeowners before you in committee. And I will tell you that this concept, as you listen to other proposals, it needs to be considered there as well. If you put multiple exemptions on the same property, we have to know how to apply that math. Because if I applied the 50% first and then the 4%, it all changes the value for that taxpayer, and we need to make sure we're doing it uniformly across the state. So with that, Mr. Chairman, I will stand for any questions related to that.
Director Henson, right now what we have in place still basically does almost everything in this bill. The real change will be on January 2026, the sunset goes away, correct?
That's a very important piece of this. The sunset goes away, and then the change in the months that you have to live in the property. And I do know from testimony that we've heard from county assessors that we have some, I think even members of the committee have testified that, you know, I'm not in that property. They've testified that, you know, and so I think the 6 months is going to change the number of qualified applicants for 2026. But you're right, this particular bill that you're considering does only those two things. My hope is that you could also address the oversight of last year's bill that did not include language that netted out any other exemptions that may have already been applied to that property.
This is like the Oprah show. You get an exemption, you get an exemption. Sorry, I digress. Okay, who wants to be next?
Mr. Chairman, members of the committee, my name is Dixie Huxtable. I'm the Converse County Assessor, currently serving as the chairman of the Legislative Committee. Thank you for allowing us an opportunity to speak. I have with me a colleague, the assessor from Fremont County. And if you look in the back of the room, you might recognize your own assessor. We are having our assessors meeting here, and I encourage them to come participate and be a part of this legislative session. Many of them have not. So if you get time at the end and want to visit with them, they're certainly here to answer any questions that we may have. In regards to the bill before us, Senate File 67, we took a vote this morning at our meeting, and we did not take a position on the bill as it's drafted, but we want to voice some concerns should it pass as far as the repeal. Most of this is a policy decision, which is certainly in your hands to do, but there's some clarification that we feel should this bill move forward and pass and the sunset be removed so that it's an ongoing exemption, we need some clarification on administration of a couple things. On the bill, page 2, line 5 up there talks about not more than one exemption under this paragraph shall apply to the same property in a year, and so on and so forth. Our question has to do with that and the ownership portion. The definition in the original bill from last year had language and defined owner, and it was specific to an owner could be a member of a partnership or a corporation for qualification purposes. Here's a scenario that we are dealing with where we have property that is owned by a corporation with multiple houses on that property, and people living in those houses both would qualify age-wise and property tax payment-wise, but the property is owned by one owner. It's a corporation. The question we have is the intent that if the person living in house A, who would qualify based on age in 25 years, is eligible for the long-term homeowner's exemption on that house, and then the second house where the brother lives, for example, that would qualify as well, that would be two exemptions on the same property, because even though they're separate houses, they're on one property owned by one owner, the corporation. So we need some clarification moving forward. I do not have any draft language, but we're more than happy to help with that should this move forward and you want to take that up. It goes on page 2 in that one that says that no owner shall claim more than one exemption under this paragraph in any year, including property that houses more than one family. It's a little bit confusing in the scenario I just gave you. You have two different people applying for the application for the exemption, but the property is owned by one owner, XYZ Corporation. So that is one question, and I can take questions for that one. We also have an issue with the land as we move forward. So do you want me to keep going or answer that question first?
Let's take care of this first. Senator French?
Thank you, Mr. Chairman. Assessor, let's back up to your example of one property owner and multiple houses there and blah, blah, blah. Do they own that house? Because if in your example, it's one property owner with 4 or 5 houses, and yeah, there's somebody 65 or older and they've been there 25 plus years. Are they an owner of that house that on that one person's property? If not, they don't qualify. Is that correct?
Mr. Chairman, Senator French, the corporation owns the property. The residents are an eligible person based on age and the fact that the taxes were paid. In the original bill, it defined owner means any of the following, and one of those is a person who occupies a primary residence owned by a corporation, partnership, or limited liability. So the belief out there is that as long as they are a partner or a shareholder of that entity, they're eligible to apply for the exemption because they're 65, they've paid taxes through the corporation for 25 years. So then the exemption would go on that house that they live in. That house is owned by the corporation or the partnership or the LLC or the trust. So when the bill was drafted a year ago, it was very specific to define owner to include all these things. I don't know the exact intent. I think there was some discussion about the fact that they should get credit for having paid 25 years worth of taxes if they were a member of the corporation that paid those taxes. I don't know if that's you all's intent, but we've now run into those specific scenarios in probably every county, we have something very similar going on where they're asking for multiple exemptions on the same property because different people live in those houses and would qualify based on age and 25 years of payment. But the property itself is owned by the corporation. So we just need a little clarity that when it was only a 2-year program, we thought we could maybe work it through with the department's guidance. But if this repeals and becomes a permanent exemption in the statutes, we're gonna need some clarification, or this is gonna get very muddy for us to administer. And we'll administer however you put it in the statutes. We just need that help.
Senator Pappas.
Thank you, Mr. Chairman. So in that scenario, if you've got a corporation, say it's a family corporation, and there's 5 brothers and sisters, and they each have 5 houses on this property, and they each qualify, do you get a check for each property, or does the corporation give you a single check for all of them?
Mr. Chairman, Senator Pappas, we don't get the check at all, but we send out one tax bill. So to answer that question, there's one tax bill that goes out with a value that includes all of those property, but we would be potentially applying the exemption structure by structure or doing a calculation to add up all those structures to apply an exemption on it. Obviously, that's going to be a manual thing that we'd have to do. The system's not going to be capable of doing that for us. And to be honest, we have differing opinions across the state from the assessors. Some believe that because that is one property, there's only one exemption allowed. Other believe that because the applicant is a person, not a corporation, the applicant is entitled to it. If John lives in one and Tom lives in the other, they're both eligible. So we just need some clarification on what the intent is in this case. And it could be a partnership, it could be trust. We have situations where husband and wives take title to 2 different properties, sign a sworn statement that one lives in one and one lives in the other, but it's the same owner on the deed, but one lives in one house, one lives in the other. They both meet the age qualification in the 25-year. Are they both entitled to it even though it's the same owner of record? We need some clarification.
So if in the scenario where you have multiple houses, but one of the houses is being occupied by someone that doesn't meet it, say it's a son who hasn't paid taxes for 25 years, or moved out of the house. Or has just moved out into a new house that's owned by the corporation, obviously that the intent of the law would be that wouldn't be exempt. But if you allow multiple exemptions to the one entity that's paying the tax, then I don't know how you would keep track of who's in what house and what their age is, because they're only applying once, right? Not for
Mr.
each.
Chairman, Senator Pappas, each owner occupied resident is applying. So I have an example in my county where that's the case, and I've made them identify which house they're living in as far as our records. Is it imp number 1 or improvement number 2? And so, yes, it is going to be a dilemma for us to track and to maintain. Obviously, we're going by taxpayers' swearing statement. They're the ones that are telling us this is the house. The question is just, should we be giving those 2 exemptions on that property, or should it be limited to 1 because that's the owner? There's one owner on that property, and they have to choose which house they want to apply it to, which we'll do it either way. We just need some direction on the best
Another
scenario.
question, Mr. Chair. What, besides corporations, are there other entities, say living trusts or other folks that own property that residences not in a personal name?
Mr. Chairman, Senator Pappas, yes, we have partnerships, and the law was specific to include in the definition of ownership, owned by a corporation, partnership, or limited liability company. If the property is a shareholder or owner of the corporation, partnership, or limited liability company, it also includes a person who occupies a residence as a vendee in possession under contract. So it could be a contract for sale. The property may actually be in somebody else's name, but they're buying it under contract. It also is specific to include trusts. And so there was a lot of thought, I believe, put into that to make sure we were covering everybody as an owner getting the qualifications in there, but I don't think we thought about, or it was delved into enough. Is the property, if the property is the same owner, should it only have one exemption applied to that account? So that tax bill comes out with one exemption, not multiple.
Go ahead, Senator French.
Thank you, Mr. Chairman. Assessor, you may have stated this, I'm getting really confused on this one. Do you send out a property tax assessment to just the owner of the land or the corporation or whatever? Or are you sending out property tax notices to maybe 2 out of the 5 houses that qualify for this?
Mr. Chairman, Senator French, typically, and to the best of my knowledge, we're sending out one tax bill to the corporation or the entity that is the owner of record. Who pays those taxes? I don't know. I know in my county, Converse County, sometimes the owner of the house will calculate what the tax is on the house and come pay their share, and somebody else will pay their share. Corporation will pay the taxes on the land. So as far as the tax bill goes, it goes to the owner of the real property that's of record. As far as who's paying it, I can't answer that. I'm not even sure if the treasurers could answer that wholeheartedly, but that brings up the question of I'm paying the taxes on this house because I come in and write the check. The corporation pays the taxes on the land. So it's probably a mixed bag, Senator French, of who's paying, but the bill is going to one person, one entity. If I could.
Any
go
other
on.
questions?
If I could go on, Mr. Chairman, a couple of other,
Got one real quick one.
sure.
So if we do we're heading into the corporation, a place with 5 properties and all 5 are exempt. And we tie that into one exemption, it's gonna be about 5 times, let's say the houses are exactly the same. So I don't get caught up on that one. So the taxes are gonna be basically the same, because they're exactly the same, right?
Theoretically, I think I'm following you, yes.
So whether we lump them together, it's gonna be 5 times the valuation or a fifth of the valuation. So the actual exemption's not gonna change, just how we account for it. Would you agree with that?
Mr. Chairman, no, the case where there's 5 houses and let's say that they all qualify, the way that one interpretation of this administration of this bill is that we would calculate a 50% reduction on each house, what that value is on each house, and aggregate them together, add them together and make the exemption the total of that. The other administration thought is that it's one house. They pick which house to apply it to, and it's a 50% exemption of just that house value. So it is the difference between an exemption on one house versus 5 houses. So it can certainly amplify the exemption.